Assalamu alaikum. My name is Saida Islam. My student ID 23120371335. Today I will present an overview of the latest monetary policy announced by Bangladesh Bank. This presentation covers four major points: a summary of the policy, significant changes compared to the previous policy, tools used by Bangladesh Bank, and finally the reforms that I believe are necessary going forward. Next, our second slide. Monetary policy. Monetary policy is the strategy used by a country's central bank to control the supply of money and credit in the economy. Its main goal is to keep the economy stable by controlling inflation, promoting growth, maintaining employment, and stabilizing the currency. Next slide. Summary of the monetary policy. First one, tight monetary stance. Bangladesh Bank is keeping a strict policy to control inflation and will not cut rates until inflation goes below 7%. Second, policy rates. Repo 10%, SDF 8%, SLF 11.5%, all kept the same to limit money supply. Third, inflation outlook. Inflation has fallen to 8.48%, but it is still high. Bangladesh Bank wants it to reach below 7% with a long-term goal of 3 to 5%. Fourth, credit growth. Private sector credit growth is lowered to 7.2%, showing Bangladesh Bank is being careful with lending. Then fifth one, exchange rate and reserves. Bangladesh Bank will use a market-based exchange rate but may intervene to reduce volatility. It also aims to rebuild foreign reserves. Sixth, financial stability. Bangladesh Bank is worried about high NPLs and plans stronger monitoring and reforms in banks. Last one, external risks. Bangladesh Bank notes risks from global oil price, trade tensions, and market uncertainty. It will adjust policy if needed to protect the economy. Our next part, significant changes compared to the last monetary policy. First one, higher policy rate. Bangladesh Bank increased the policy rate again to fight inflation more than the previous policy. Second one, stricter liquidity control. Stronger steps taken to reduce excess money in the system and slow credit growth. Third one, more focus on inflation. Inflation control is now the top priority, even if economic growth slows. Fourth one, more market-based exchange rate. Bangladesh Bank moved further toward a flexible market-based exchange rate to reduce instability. Fifth one, tighter lending rules. Banks must lend more carefully with stricter limits compared to the last policy. Sixth, higher reserve requirement if applicable. CRR or SLR slightly tightened to control liquidity more than before. The last one, more support for remittance and export earnings. New incentives and monitoring added to increase foreign currency inflow. Our next topic, monetary policy tools used by Bangladesh Bank. First, policy interest rate. Bangladesh Bank changes the repo rate to control borrowing and inflation. Second, open market operation, buying or selling government securities to control money supply. Third, cash reserve ratio. Banks must keep a certain amount of money with Bangladesh Bank. Fourth, statutory liquidity ratio. Banks must hold a fixed portion of liquidity assets. Fifth, moral suasion. Bangladesh Bank guides banks through instructions and circular. Our last part suggests the policy reforms needed from my understanding. First, control inflation better. Use data and forecast to act quickly. Second, support priority sectors. Give more loans to SMEs, agriculture, and green projects. Third, reduce non-performing loans. Improve bank monitoring and risk management. Fourth, promote financial inclusion. Expand digital banking and rural access. Fifth, stabilize exchange rate and reserve. Keep taka stable and build forex reserves. The last one, encourage sustainable finance. Support green and climate friendly investments. That's all. Thank you.